Alrighty traders, George here, and time to get back at it. I've been away for a while. I've not really looked at the screens too much, but I figured I'd get a video out to you all and just show you big picture what I'm looking at here. Before I move on with that, I do want to thank all of you that sent me emails. I appreciate all the thoughts. I am able to see out of my right eye, and that is quite a good thing to be able to do that. It was pretty up in the air there for a while, but it looks like things are starting to stabilize, and don't think I'll ever be back 100% there, but where I'm at right now is a really good place. So thank you for all your thoughts and prayers. Really appreciate that. Let me just move on and show you just these three charts that I'm looking at here. This is some big picture stuff. Oil, gold, and the S&P. We'll start out with oil here. This is the balance beam. This is a very nice directional move here for oil, coming off of the low 40s, getting up to the low 60s. Since the start of May, oil's chopped up in about a $3-4 range here, topping out into the 61s and getting some support in the 57s, even as low as into the 56s here. But the tighter range here, and you can see this balance beam, a lot of trading commitment here in this $4 range, and that's where we are right now. We're literally right on the spike of the dominant balance beam. Below about 59s or so, things really start to open up. This air pocket here, there's just not as much trading. So with this contraction following expansion here, this can create a lot of strife and a lot of problems for traders within these zones. You can see how violently price is recovering the center part here when we break below, come back through, fill to the other side. Break out, can't hold it, we break down, we fill to the other side. How many times have we talked about that in the live room? There's a great example of it, big picture. So where we are right now is if we can break below 59s, and we're getting pretty darn close to doing that right now, that will set up an opportunity to be short at a much better spot away from all this trading commitment. And these are the three main targets that I'm looking at here. This first one, the most important, and if price can really stay below that, we could see a much bigger sell-off in oil. To the upside, basically 61 is the gate. If we can get over 61, we're riding on top of all of this trading commitment here, and that will give the bulls an opportunity to move it up. 63.95s, 66.49 is a real key zone here into the mid 66s. There's a lot of overhead resistance there, and if we're able to pop through that, there's a good chance we're going to go up and tag 75 bucks. But I'm expecting this to be immense overhead resistance, at least at the first or even second touch, assuming we can move up there. But right now, oil's got a lot of work to do, big picture, and that's what I'm watching for oil. Let's move over to gold. Reset this whole thing like we're looking at it fresh right now. We can see that we made a new structure high here, but we made a new structure low there. So a lot of indecisiveness. This very dominant trading zone here that spikes at about 1204 is still the dominator here for gold, and the bulls can't own this, and the bears are getting some better extension on breaks below, but they're really not able to do much extended damage here. So while gold is in a really bearish state, they're just not really able to take it to some new lower levels, at least yet. This last move here was actually a pretty good long signal as represented here. Once it gets over 88s, it's over this spike here, there's a good shot it's going to go up and tag 1200. Look what happened. It hit that, and look at the resonance at the dominator there. Bam. They just rejected 1204s and right back down into this 1188 zone. So it's still ringing some of these bells we've been talking about. Where we are right now, we're at 84.80s. So another $4 higher, chance to be long again, just like this area here. And you got to look at this as key overhead resistance for that first target. If it can clear that, then possible extension targets up here. A little bit lower than where we are, and we really start to move away from where all this heavy traded commitment zone is, and that opens up these downside targets. But look to the left here. We start breaking lower, and there's just nothing much to keep price supported other than maybe some new energy coming out of who knows where. It's happened a couple times before. A little bit of short covering, a little bit of bottom feeding, and up it goes. So that's what I'm looking for right now. If you've got a flat standpoint in gold, these are great trigger points to look at, and targets as well. And lastly, let me show you the S&P here. Breaking below 2110s puts price with the potential to move into this zone here. There's a lot of trading commitment here. This is not a good spot to be going short. Intraday, there's some opportunities here, but really below 2110s, you've got 25 points of heavily traded areas here. So this is really not a great spot to go short. Big picture, bigger picture, you'd be much better off below about 2085. But I can show that to you a little bit more refined on this chart here. So on this hybrid chart, you can see this commitment here, 2085, and then at about 2096, we got the spike here at about 2107s, and then up here at about 2113. So these are all the key price points. So where we are right now, these would be some targets to look at below. And with price just taking over the top line here, it doesn't need to go too much further than where it is right now. It's already there this morning, but considering you're flat now, getting back over 2116s, just 2 more points, that really puts a lot of pressure on the bears to do something. There's no trading commitment above that, and very likely we're going to see 2135s and 2154s on this impulse here. The only thing that would really jeopardize that is getting below 2085. Otherwise, these are practically a lock to the upside. And that's what I'm looking at for right now. Alrighty, gang, there's your look at 3 key markets. That'll do it for now. We'll see you back in the live room.